There you go. So we're live. Well, sorry, not live. Sounds a bit grand. We're recording. So good evening, good afternoon. It's Jonathan Brathwaite here again. And with me is a long-term friend, a colleague of mine, Mr. David Haran. He's based in Ireland. David, how are you?
Hey JB, I'm good, thanks. Great to see you.
Good, yeah. Likewise, it's been quite a while. So we were just catching up before we started this. So David is based in Ireland, and today we're going to talk a lot about retail banking, what's happening in digital retail banking, and I also want to get David's thoughts on and his views on what's happening in cryptocurrency and what he's up to in data science and what's driving that. David has a long storied career, which he'll tell us some of, but you know, I really think that his strategic view on things will bring value. And so, yeah, let's get right into it. So, David, where do you think we should start? Where would be a good place to start first? Should we talk a little bit about what you're up to at the moment?
Sure. Jonathan, I think one of the things that might help is if I sort of break down the thinking that I have on this sort of space in terms of digital financial services and what's happening in the world. And there's sort of four verticals that we need to think about from a strategic perspective in terms of what fintechs are doing. And, you know, they throw all these words out there, fintechs, tech fins, GAFA, all these words and metaverses and all these kind of things. But it boils down to really four simple verticals. So in my opinion, digital financial services break down into things where you're trying to pay for something transactionally, you're trying to save some money, you're trying to borrow some money, or you're trying to do some form of risk management. And pretty much every fintech that's out there fits into one of those verticals. Okay, some of them span more than one, which is great, but they all fit into at least one of those verticals. And the phrase that was very popular a couple of years ago, say when Revolut was starting out in London, you know, particularly in London or the UK, was unbundling leads to rebundling. Okay, and what that means is you take a bank that offers many, many services as a retail bank. You know, they've got current accounts, deposit accounts, mortgages, wholesale loans, whatever it might be. Well, Revolut, as an example, or, you know, you could take one of the currency exchange fintechs as well. They started out with something very simple. They unbundled one of the bank's services. So we'll take foreign exchange, for instance. They unbundled foreign exchange and they got very good at doing foreign exchange digitally. Okay. And they became masters at that, and they attracted a lot of people in. Now, people at that stage, I'm talking now about 2016, you know, 2017 kind of time frame, people weren't ready to move from their banks, but they were really happy to be able to, let's say, buy dollars with sterling in a really efficient manner, a really safe manner, and a digital manner. And those fintechs then started adding new services. So Revolut, currency exchange, but then they started adding foreign exchange, then they started adding current accounts, then they started adding stock trading, etc., etc. So unbundling leads to rebundling. And now with your Revolut account, again, and I'm not a particular advocate of Revolut, it just happens they're easy to talk about, but they do provide an awful lot of services. And if you take another fintech in the UK, Starling, which is a kind of a sort of an offshoot from Monzo, which might be more familiar to the viewers and listeners. But there was a bit of a breakup at Monzo a few years ago, and structurally they went two different directions. And from Monzo came Starling. Now, Starling were very clever. They're the first of the fintechs to really get into the lending space. Because as you know, Jonathan, you know, banks make money from lending money. They don't make money from taking in deposits. They've got to lend that money out. Of course, you know, your accounting knowledge will say the deposits are a liability for the bank. The asset is the loan. It's the other way around to the way people think. So you've got to lend that money out to make money. And this past year, during the pandemic in the UK government challenged the major banks in the United Kingdom, the NatWest, the Santanders, and all of the rest of them, to make these pandemic loans. And they were taking 2 to 3 weeks to turn around a pandemic loan during 2020. Starling Bank jumped in and turned them around within a day. from application to money out within a day, max 2 days. And they took an enormous chunk out of the pandemic loan business in the UK. And that was business that the UK government, now forgive me, I won't have exactly the right percentage, but I think the UK government underwrote 75 to 80% of the loan. So the risk was basically zero to the lender. And Anne Bowden is their CEO. She spotted this space. She's a banker, a retail banker going way, way back to bricks and mortar banking, actually in Ireland, if I do say so. So we're always proud of our Irish people who do well. But Anne spotted this opportunity and jumped in and made these loans. And now what you have, instead of the fintechs being judged by how many current accounts they have or how many transactions they change, because as you know, transactional banking isn't that profitable. Starling are profitable quarter on quarter on quarter because they're lending money out, and they're really now, that unbundling leads to rebundling. They've unbundled payment services, savings, and now they've added borrowing, and they'll also start adding risk management services, like for instance the sale of insurance and things like that in the very near future. So that's what's happening in the marketplace. I'm being UK specific because it's easy. In Ireland, we have some smaller fintechs that people might be as well aware of, but the principles remain the same.
So in terms of what does this mean for the big banks? You mentioned on NatWest, the Santander's, and the large banks in Ireland. What does this mean for them? Are they going to, do you think they'll be successful at converting to digital? Because that gap you talked about, 3 weeks versus 1 day, 3 weeks for NatWest to onboard a pandemic loan versus Starling coming along and doing it in 1 day, is, do you think they'll be successful at converting?
Not if they keep up that attitude, that's for sure. Wow. So let me sort of explain this. Yeah, and just to give everybody a viewpoint, I spent 5 years working at Ulster Bank here in Ireland, which is part of the NatWest group. Right. And the last 2 years I spent working specifically in NatWest, most of the time actually up in Scotland in the United Kingdom. So I'm very familiar with the bank and very familiar with what they do. And they do an awful lot of things really, really well. So, big bankers and folks in that industry, they should not think that everything is going to fall apart. It's not, but they also have to adapt. Okay. And, when I'm lecturing on this topic, would you believe I bring up the origin of the species and Charles Darwin, and everybody's kind of looking at me, what's this got to do with banking? Well, if you read Charles Darwin, everybody thinks it's the fittest of the species, the fastest, the biggest, the tallest. No, that's not true. Darwin's quote said, the most adaptable to change will survive. That's what he defined the fittest as, the most adaptable to change. And NatWest in that space, and I'm picking on NatWest, but I could have used Santander, I could have used Barclays, it doesn't really matter. Lloyds, they were all the same. They weren't adaptable to change in that pandemic loan moment. They just put it through their normal channels. And through their normal channels takes 3 weeks, and they got destroyed, okay? So if they don't change, they will have a problem. And to give you an idea of the scale of the problem, Mark Carney was he was the governor of the Bank of England up until 2020. And Carney, in a speech somewhere in 2019, 2020, it was definitely pre-pandemic, but Carney talked about this wave of innovation that we're seeing that promises a revolution, which will democratize financial services. Now, Jonathan, you've been around a long time like myself. Governors of the Bank of England don't talk about revolution and financial innovation and democratizing financial services. That's not their language. Yeah. And what he's talking about here is he's seeing a wave of innovation. In the same way, the music industry is a really good way to think about this. Something huge is happening now, and those huge sea changes take about 7 to 10 years to happen. So think about, we know that in the music industry that vinyl has come back around, okay? But let's remember when they were called records, right? Yeah. So we had records in the 70s. You're too young for that. But then tapes came along in the 80s and everybody moved to tapes. Then CDs came along and we chucked all our tapes away and the records had already gone. Terrible shame that we don't have them now. And then streaming music came along and we all thought streaming music was going to be everything. So we didn't keep the tapes, the records, or the CDs. We got rid of everything. Well, yes, streaming is okay, but streaming is compressed music. And what's happening now is audiophiles everywhere are saying, the records you had back in the day, the quality of the music was better than what we're streaming with these days. And there's another sea change back to vinyl, which is a peculiarity of the audio industry. But the point is, those sea changes happened about 7 to 10 years, each one, and each one eliminated the last. It's just ironic that it's come full circle. Right. And in banking, what we're seeing is, if the banks, the big banks, don't change, within 7 to 10 years, they're going to have great difficulties, because in a recent study of millennials, 71% of them said they'd rather go to the dentist than go and speak to their bank. No, I don't know about you, Jonathan, but I've never been a great fan of the dentist. So 71% would rather speak to the dentist than speak to their bank. So this is the change that's happening. And Carney is seeing this, and this is why he's talking about the revolution. So the banks have to get with this program. Now, the banks have three major strengths, and I call them the 3 C's. They have cash, plenty of it. Banks are still making money because they have huge loan books that are kicking out massive amounts of profit. They have compliance skills, which are, as we know, really, really important. And the fintech industry is kind of getting a break at the moment, because a lot of regulators in this part of the world are letting them operate in sandboxes, which are protected areas where they can try out new products. Now, I'm not against sandboxes, we need them, but it does create a slightly uneven playing field where the fintech is slightly favored over the bank. That'll even out over time. But the banks ultimately have the compliance expertise. And let's also not forget that the banks have the customers today. So maybe, like myself, for what I do, I probably have more fintech accounts than most people, because I like to see what they're all doing. But if I were typical of a person in Ireland at the moment, most people in Ireland will have their bank, which they bank with. They might have a mortgage provider who could be different from their bank, and they probably have a fintech provider who they use for transactional services. Okay. So they'll revolute has now become a verb. Revolute that to me, because it's easier to share money. So for instance, my kids, whom you know, Jonathan, but they're now basically adults, and they'll say to me, I'll hand them 20 euros or whatever they're asking for. No, paper money. No, I don't want paper money. Revolute it to me. Because they want it on their card, because they don't like to carry the cash. And the change with millennials is, back in our day, if your wallet was bulging with cash, you were the man. It was a great thing, right? Now these kids are much more sensitive about those things, and they don't mind having money on their card, but they don't like to carry cash. And it's maybe for safety, but it's also for humility, and it's also just because it's the right thing to do these days. So the world has changed again, and the banks are going to have to get with this. Now, one of the banks here in Ireland has same-day money transfer within its own, from one account in its bank to the other account, same day. So that's okay. But if you go from one bank to the other, it's next day at best, or possibly 2 days. Now, that's just not good enough. These kids want it instantaneously. And they also aren't happy to get monthly statements. That monthly, what are you talking about monthly? They don't want monthly. They want real-time statements and real-time categorization of what they're spending it on. So the banks have to make changes, or they will fall too far behind.
Wow. Yeah. So just at a high level, like, how are the banks in the UK, the established banks in the UK, the legacy banks, how are they coming at this? Are they forming, like Goldman Sachs set up a digital bank, right? Which I believe was a separate division. It's called Marcus. Is that what NatWest and these guys are doing? Or are any of the banks looking at digitizing their entire infrastructure so that they can change into a digital organization? Is that viable? Is that possible?
So NatWest set up a digital bank, which they called BO, B-O. Nobody asked me, because Bo in Gaelic means cow. So their bank was called Cow.
Right.
It's never going to be a winner in Ireland. They opened it and they shut it again. And they also got rid of the guy that was the leading sort of proponent of digital technology within the bank. Now, I have no idea why that happened, but it was clearly a statement move that they didn't like the direction things were going in. Now, Bo was losing money hand over fist. Marcus is different. That's making money for JP Morgan, and there's lots of things happening there. We could talk about UBS picking up Wealthfront and other companies in that sort of robo processing environment for trading. So there's lots going on, and the banks are throwing money at the problem. But they're, in my opinion, and there's very, very clever people doing a lot, but in my opinion, it breaks down to sort of three core areas, okay? So there's the front end, which is, for want of a better term, what the customer sees, the website, the web page, the interaction there. Now, every bank pretty much these days has that pretty much down. They probably have two-factor authentication. They have lots of different ways to log on. They have Face ID, they have fingerprint ID. Pretty much that's a given now. If you don't have your front end sorted now, you're very far behind, okay? Yeah. Then I'll skip the middleware just for a moment and I'll go to the back end. This is where the problems start, because the banks invested huge amounts of money on supercomputers, we'll call them, from the 1990s, in the 1990s. And they had to, because they had, millions of transactions going through to deal with all of the loan books that they had. And it was right that they did those things. And it's not that they're trying to extract extra years out of these systems or anything like that. It's that, how do you migrate that to the cloud, which is where we're going, okay? Everything's going into the cloud, right. But how do you do it? Now, I'm aware that most of we'll call them the high street banks in the UK, are in the process of migrating to the cloud. And a lot of it is Amazon Web Services, there's Azure that Microsoft has, there are a couple of different things out there that they're going to. But you can imagine the complexity of this. And you can imagine all of the systems that it feeds into. So simply put, it's got to feed into the accounting system. It's got to feed into the customer management system. It's got to feed into the ERP. It's got to feed into the payroll system. It's got to feed into every possible thing you can imagine. It's got to feed into. So the back end is a complicated business. And give you an example. Ireland, now Ireland, we've got, I'll do all Ireland without being political, but we've got about 6.5 million people on the entire island, okay? Yes. And Bank of Ireland would be the biggest bank on the island, and Bank of Ireland has branches in the Republic here in the south and in the north and Northern Ireland, okay? Sure. So that would be our biggest, and they have actually customers in the UK as well. But for them to change, we're talking about a project that's been running for over 2 years. They brought in a guy from New Zealand specifically who had experience in this kind of systems migration stuff before. They budgeted $1 billion and they're heading for 2. Jesus. And this is Bank of Ireland. Now, they don't have 6.5 million customers. That's just the population they serve. So if you go to the UK, which is, 60 odd million people, but roughly speaking, 10 times the population. I'm doing a little bit of double counting there. But you can imagine the complexity that Lloyd's or NatWest or whoever, Barclays or whoever it might be. And then you take that onto a European context and you go to Deutsche Bank or you go to Santander or you go anywhere, and these things are complicated. And I skipped the middleware because the middleware is actually even more complicated than the back end, because the middleware has to join the front and the back and make sure that, and by the way, the complexity of this is, you're riding the bicycle backwards and forwards while you're trying to do everything as well. It's not like you can shut down for 6 months and say, we'll be back with you in 6 months. Don't worry about your money. We'll have it for you in 6 months. It doesn't work like that.
Yeah. I like the way that you have explained this, because it really gives you a feel for what's actually happening and on a practical level. And so what you're saying is that this change is going to take place over time. Definitely, it's going to take place over time. It's
absolutely, Jonathan, it is. And I want to be fair to the big banks as well, because I've done some analysis work on this in terms of strategic analysis for fintechs and a little bit for the bank as well, and looked at strategic opportunities. There are lots of strategic opportunities for fintechs and lots of strategic opportunities for banks. This is not a one or the other type scenario. This could be the banks looking at the stronger fintechs and saying, well, we'll take a piece of you and we'll take this. It could be the really strong fintechs looking into the banks and hiring out of the banks for the compliance skills that they're going to need. So this is a very fluid situation, But that's why I go back to Carney's quote. You have to think of it as a sea change, and an innovative sea change where there's a world of change coming. And if you don't get on board with that, you really will be left behind.
Yeah, appreciate that. So, no, you mentioned compliance there a little bit. So, what are your thoughts generally? You can feel free to start anywhere on cryptocurrency. What do you make? As someone who spent 5 years in the banking system and you understand fintech, What are your thoughts on cryptocurrency?
Well, my first primary thought is, approach with caution as an investor. Okay.
Yeah.
I know people who've made money, lots and lots of it, out of Bitcoin, Ethereum, lithium, and so on. Okay. There's lots of people who've done very well. But, if you go to a racetrack, somebody's winning and somebody's losing. Okay. So crypto to me is a little bit like that at the moment.
Yeah.
I mean, Jonathan, I might have $50 in Bitcoin at any given time, just because I like to keep an eye on where it's going and whether it's going up or down. But I'm not of a risk profile, or in my head anyway, I'm not at the point where I could put serious effort or serious money into crypto, because the simple answer is, and I teach this, I put up a little graph, and the time frame of 2018. And I say to the students, I say, look, you want to repaint your kitchen. And the painter came and gave you a quote for $4,000. Like, everybody says, okay, that's easy. And he says, but I'd like to be paid in crypto. So you go, okay, and you look up Bitcoin. Well, at a certain time in 2018, $4,000 was one Bitcoin. Okay. And you say to the guy, sure, one Bitcoin. Now, you don't hedge, because you don't know anything about hedging. You just let him do the job, and you come back, and he comes back. And 6 weeks later, he says, okay, can I have my Bitcoin? And you go to the market and get the Bitcoin. Oh, hang on a minute. Bitcoin is $12,000. So now your kitchen didn't cost $4,000 to paint. It cost $12,000 to paint. It's still one Bitcoin, and everybody gets it straight away. And they understand that Bitcoin is a highly, highly volatile asset. It could go the other way. It's because of the terrible situation that's taking place in Europe at the moment with Ukraine and all of that. Bitcoin has tanked. So, you could argue, well, I could have got this for half the price. Yeah, okay. But you know what? When I'm painting my kitchen, I'm not necessarily thinking about a financial investment. I'm just literally thinking about getting the paint on the walls and getting the guy out of my house as quickly as possible. Yeah. So that's it for me. And I try to explain to my students that Bitcoin and the other cryptocurrencies, there's tremendous value in them in terms of understanding what they do. And there's tremendous value in understanding where things are going to go with crypto. But as an investment right now, it's not a currency. You shouldn't think of it, in my opinion, as a currency right now. You should think of it as a digital asset. And if you think of it as a digital asset and you're willing to invest in a digital asset, that's okay. Now you know what you're doing. It's the same thing as over here in Ireland, the bookies, all those guys, they call themselves turf accountants, which is just, it's a fancy way of saying they're going to keep your money because the horses run on the turf, Right. It's the same thing here. Digital assets, it's kind of a funny way of looking at an asset and kind of a funny way of looking at it digitally, but it is to a certain extent gambling, crypto at the moment. Now, if you want to talk about stable coins, for example, stable coins will fix their value to something like gold or the US dollar. Okay, that's fine. Yeah. Or you want to talk about central bank issued digital currencies. There's a lot of talk in Europe now about the digital euro. Now, the digital euro doesn't exist yet, but what would the benefit of a digital euro be? Well, in the past, as you know, Jonathan, I used to work for telecommunications companies, and we would have been buying large amounts of equipment and shipping them to various fun places around the world. Let's say we were sending, $30 million of equipment to some far-flung part of the world, and we were expecting payment back. I mightn't want payment in the local currency that I was, that the country is going to. I might ask for payment in euro, but that kind of volume of euro might not be available to a telecommunications company in some country or other. It just might not be available, and their central bank might have to get involved. Now, I don't want to name countries, but I'm specifically speaking of an instance that occurred when I was working for Cable and Wireless. And, foreign exchange just was not possible to get out of a particular country. We couldn't get hard currency out. Yes. So we couldn't send any equipment in. Now, a digital euro or a digital dollar would have helped in those instances. Now, there's no digital euro yet. There's no digital dollar yet, but there is a digital yuan. So we have a Chinese digital currency already. Now, the flip side of that is that during COVID, the Chinese government, because it's a slightly different political situation, and every country is entitled to run their country the way they want to, but they provided the COVID loans similar to the UK that I mentioned already. but they provided them with stipulations. And if the stipulations weren't met, then the digital yuan didn't get transferred. So it became a method of control as well as everything else. Now, we're not going to have a geopolitical discussion, but you could argue that it's the same in the UK. There's a lot of forms you have to fill in and so on and so forth, but they're not tied to sterling. So we also have to be a little bit careful about digital currencies, central bank issued digital currencies in that way. So interesting times.
So, I mean, you describe cryptocurrency as digital, looking at it as digital asset, and so thinking of it from as not as a currency, as an investment. And that's very sober, kind of very clear thinking, because again, I consume a lot of the stuff here in the US press about what's happening with crypto, and there's the big concern at the moment seems to be the hacking, and also on the compliance side of things. So can you talk a little bit about what your view? Do you think we will get to a point where crypto and retail banking and these things are going to be able to operate? I mean, obviously things will always happen, and we're never going to live in a world where things don't happen. I mean, even with the SWIFT transfer system, you every now and again you'll hear stories about one bank losing $100 million because they wired it to the wrong place or something like that. But do you think that cyber security will be possible so that there will be a stable kind of digital financial fintech system? And then what are your thoughts on cryptocurrency in terms of compliance? Do you see any issues there?
Jonathan, you've nailed two huge points there, so I'll take them in turn. The first one is hacking. Okay. We unfortunately right now in the world are seeing the result of hacking farms, and the flow. If you follow the inflows and outflows of currency that have taken place over the last couple of years, you'll know that a large amount of foreign currency has gone into a particular country in Europe at this point in time, and that country is at war with another country right now. Yeah. And the two things that country is generating more than anything else is gas that's feeding all of the homes in Europe, and they're being paid for that, gas and oil, I suppose, and they're being paid for that. And the second major industry, as far as I can see in terms of the inflows, because I can't see any other product coming out of Russia, the major other thing that must be coming out, because the inflows are going back there, has to be generated by cybercrime. And that would certainly be the industry chat when I chat to people who are involved in the, I nearly said who are involved in cybercrime, but no, who are involved in protecting against cybercrime. Yeah. They would see that a lot of the denial of service attacks are coming from Russia. A lot of the malware attacks are coming from Russia. Some of the deepfake scandals have definitely come from Russia. We know now that they had specific involvement in the 2016 election in the United States. And I know I'm pressing some tender buttons here, and I'm not trying to take sides. I'm just saying it's clear they had involvement. So that to me is already a step too far. We want free and fair elections. We don't want a foreign superpower having involvement in the Irish elections, never mind the elections in the United States. So for me, that's a problem straight away. So the hacking really concerns me. And it concerns me even more when I start thinking about a thing called quantum computing. Now, I hope you're not going to ask me to explain quantum computing, because
it's okay. Yeah. No, topical. I understand.
Yeah, it's a tough one. But what I understand from it is that we're developed. Moore's law is talking about chips and how the chips can get better and faster, and how quickly they do that. But at the end of a certain cycle, ultimately there's only so far we can go with the microchip, and then that's it. Well, quantum computing is the next major leap. And as I understand things, when quantum computers, which exist in the world already, but they haven't quite been harnessed, but when quantum computers become sort of mainstream, every piece of cryptology that we currently have using the microchip will be rendered redundant. Now, that could happen within 10 years. So that to me is mind-blowing, because he or she who controls quantum computing or gets to the race first or wins the race first can basically take the internet as we see it today and unravel the entire thing. And every account, every money, everything that we know about would be open to those people because they can hack the passwords in seconds as opposed to weeks and months and years. So that's a very, very big worry. And I amn't qualified enough or intelligent enough to really understand what's happening in quantum computing. But I speak to my data analytics colleagues, and they occasionally they laugh at me. They give me the easy reports to read, Jonathan. They're pretty scary. So keep an eye. I think quantum computing is definitely something to sort of, you know, put those terms into your search engine every now and again and have a read about what's happening and see. Now, from a compliance perspective, specifically in relation to crypto, it's very clear to say and very fair to say that crypto has kind of been the Wild West for the last X years, X being somewhere less than 10 but probably close to 10. And a lot of when I was a kid, it used to be called funny money, but a lot of, you know, money with improper sources has ended up in crypto. And the behavior of crypto has always led one to believe that it could be a bubble. But the money that's coming in, it doesn't seem to have attached with it the hard work, the sweat, the tears of people's careers. It seems to just be something that people are willing to take huge risks on. Now, if your activity is generating, you know, 30% hard currency from ill-gotten gains, and you're happy with 30%, but crypto's paying out 70, well, then you don't really care, because you're doubling your productivity in a money laundering context, and you're doing it digitally, which is an awful lot easier than shipping dollar bills. I mean, most of the cartels in South America eventually ran out of rope because they couldn't handle the amount of dollar bills that they were dealing with, as opposed to anything else. So, you know, and it was the sheer volume and the weight of the dollar bills that they couldn't get out of the United States was their biggest problem. And then where do you store all that paper money? You know, the Colombian cartels and all of those documentaries you would have seen over the years, you know, I mean, they were burying money and they didn't even know where they were burying it most of the time. You know, it was crazy stuff. Whereas all of this digital stuff for crypto, it just moves around, and it's really easy to move around. And if you get a really talented, is that the right word? You know, a really expert hacker / compliance / money laundering person, you can move a lot of money very, very quickly, and it's a dangerous world.
Yeah, it's real. Yeah, I see. And so, I mean, here in the US, the SEC is about to really crack down on, you know, the Biden has issued an executive order. You know, and the SEC, the head of the SEC has said, oh, you know, we need to take action against this. I'm connected on LinkedIn with a couple of ex-SEC US securities attorneys who are very, shall I say, anti-crypto, but then there's a massive movement here with NFTs and you know, these big firms like Coinbase and all these guys, and then there's a movement into the metaverse and all these things. So
let me jump in there. Let me jump in there just for a second on Coinbase, if you don't mind, Jonathan. Okay.
Yeah, sure, yeah.
So Coinbase is really interesting to me. So for instance, in my day job, I hired a freelancer to do some work for me, web-based work. Chap is based out in Vancouver, and he asked to be paid in cryptocurrency. And I said to him, yeah, sure, no problem at all. What cryptocurrency do you want? And I don't even remember the one he said. And all I did was I looked up Coinbase and I checked to make sure that they, you know, allowed that currency to work. And they, sure enough, they did. All I did was I transferred what was needed in US dollars onto Coinbase. They put it into, I think it was called tethered Ethereum or so. I can't remember. It doesn't matter. And the money was transferred into his wallet, and the whole thing took a few seconds. So there is absolute merit, and Coinbase are now a publicly traded company. So there's absolute merit in things like Coinbase, because the logic behind this, the blockchain logic, the distributed ledger technology logic, is very solid. And that's what underpins Bitcoin. It underpins all of the, and there are hundreds and hundreds of cryptocurrencies now, but the logic underpinning them is very straightforward and very transparent. And it's about having a ledger, a large book, a digital book in this case, of fully transparent and fully authorized transactions. Now that's good. They're very, very good things. I'm all in favor of that. There's a little bit of negativity around actually the amount of energy that it takes, the actual physical power consumption that it takes to make a transaction work on the blockchain. But I'll park that for one side. They're not energy efficient yet, but I'll park that for a second and get to, fully permissioned, fully transparent, really organized system of recording transactions. So take an example, for instance, of let's say you're talking about a freight container and it's leaving Japan and its ultimate destination, we'll say, is Mexico, and it's stopping off in 8 or 9 ports in between. Okay, well, the blockchain can be really useful for all of the paperwork that it takes to go in and out of those ports and in and out of those countries. Right. So it's a super tanker, and it starts with 2,000 of those huge big containers on it. And the first port it gets to, we'll say, is Singapore or whatever, and 1,000 go off and 500 come on. And then it goes to India and all of them go off and 2,000 more come on. Well, it used to take days at port for this to happen. But the blockchain can allow all of this to happen seamlessly, so that as soon as they can physically offload them, there's no delay in paperwork. So as an example of an industry that can benefit from the blockchain, the freight industry and the movement of those huge freight containers is absolutely ripe for it. And Maersk, if I'm saying their name correctly, they're at the forefront of blockchain development to do this, because they can see the efficiencies that are out there using the blockchain for this. So the underpinning technology, brilliant. And what we tend to see in society is, and if I go back to a simple example like the iPhone, okay? So when Apple brought out the iPhone, Nokia were the absolute market leader in terms of telephony, right? Mobile telephony. Everybody had a Nokia and we loved them. They were great. And we played that little snake game and we thought we were great. You remember all this, right? And suddenly Nokia's market share went from everywhere to nowhere. And the reason was Apple put 3 things together. They put the phone, they put music, and they put the camera. Some would say they put email, but that came slightly later. But they made them easy to use, okay? Now, Android was out there earlier, probably is better still, but I can't use an Android phone. Even though all my developer buddies say, I can't believe you're with an Apple phone. It puts you in and it makes you do it like this process, this process, this process. But if you want mass market adoption, Apple figured out you had to make it easy. And I think what Coinbase have figured out is, if you want to really leverage cryptocurrency and you want to really leverage the blockchain underneath it, you've got to make it easy for people to get money in and out, hard currency, fiat currency in and out, so that they can then have a little play in crypto, or like I did, pay a supplier in crypto, but I understand exactly how many dollars and cents that cost me, not how many Bitcoin or Ethereum it cost me, because that doesn't make sense to me. Yeah. So I think Coinbase, I'm very pro Coinbase. I think they're the first ones to really reach out to the masses, and I think that they'll benefit from that over time. Yeah, so that's interesting.
Do you distinguish between, so there's this debate which is rolling, which is a lot of these, London, I think, has just given a lot of crypto firms their marching orders because they're not regulated. They're not, coming back to address the money laundering problems. I guess they're not prepared to have the type of compliance that would enable them to be transparent and have anti-money laundering policies in place.
Jonathan, as we speak, and you and I, we both lived in London, and I have, it's my favorite global city. I absolutely adore London, and it's a great place. But unfortunately, there's a lot of things have happened in London in the last 5 to 10 years that aren't great. They certainly lost sight of monies coming in and what to do with those monies and the origin of those monies. And it was very, very unlike the London that we knew when we lived there, which was, a proper center of a global center of finance. I think, not quite the lunatics took over the asylum, but some very reckless people took over London. And really? And you're right about the people who were there. The place was awash with money. It was awash with Russian money, to be perfectly frank, and monies from the Middle East as well. And people weren't asking the right questions, is what I'm hearing. And yes, there's a lot of cryptocurrency a lot of crypto businesses, not just currency, crypto businesses being removed from London, and they're definitely, reacting. But the horse is bolted, and I personally think there will be a little bit of a kind of repercussion for London for the next few years in terms of how lax they were for a period of time. Now, whether that repercussion is merely sort of being felt, as a reverberation and people are unhappy about it, or whether there's a real flight of capital out of London, I doubt there'll be a flight of capital out of London, because it's just such an attractive place to do business. It's just such a fabulous place. I don't think it's in any great difficulties, but they'll have to up their game. They've really taken their eye off the ball here, and they'll have to up their game. And one thing you mentioned in the last point as well was about NFTs. And, the whole NFT thing, I get asked a lot, oh, what about NFTs and what do I do with NFTs? Well,
Yeah.
if you're asking what NFTs are, you do nothing with NFTs. That's the first thing. That's the golden rule, because you don't know what they are, so don't get involved. But NFTs have the ability to create digital property rights in things that previously weren't available to do that. So, for example, you can have a picture, very famous piece of art. Now, you can go to a gallery and take a picture of the picture, okay? And we can do that an infinite number of times. So I can go to a lovely art gallery in London. I can take a picture of something that's hanging there, but I don't own the piece of art. I own my picture of the piece of art, okay? Yeah. And what NFTs are doing is they're giving you fractional ownership in the actual piece of art. Now, is that of value to you? Well, you're recorded as one of the owners of this piece of art. That's all it is. You don't have exclusivity. It's infinitely copyable, but you are one of the owners. And you could sell your ownership, your digital property right. You could sell your digital property right. So let's say, Jonathan, you and I were young men roaming around London again, and we had an eye for art, and we saw a young, talented artist, and we purchased a piece of his art. And let's say we owned it 50-50, and let's say we did that digitally, okay? So we have the NFT, you and I have paid $100 for it, $50 each. Well, later, when this guy goes on to be a world-renowned star, that piece of art could be worth tens of thousands or hundreds of thousands, and we could sell our digital property right in that piece of art, which is separate and apart from the sale of the piece of art. We would be selling our digital property right in that piece of art. So it's a complicated little area to get your head around. But where it could be really interesting, and where you get into some of the STOs and things like that, is that if you were approaching, when I lived in New York, I worked for a REIT, a real estate investment trust, and we built shopping malls. And I think there's a tremendous opportunity with some of the standard tokens that are out there. REITs are complicated to set up and expensive to set up, and a lot of them are publicly traded because there's so many rules and regulations. Now, they're great. I think they're superb investment vehicles. But with an STO, for instance, you could set up fractional ownership of a shopping mall reasonably easily, and you can make that illiquid asset liquid. And you can also separate the stream of future revenues, which is the future rental payments. That's securitization, which we've known about for years, and we understand securitization. And it's a product that's really worked well for 30 years at least in the world. But you can separate the stream of future income from the securities, from the fixed asset, which is the real estate, and you can separate those two things. But now the real estate can have fractional ownership and can become liquid. So for instance, if you owned 40% of the shopping malls, the actual building, but you needed to divest for whatever reason, you could perhaps sell 20% of your ownership of your portion and pay your tax bill or do whatever else you needed to do or whatever that might be, but still not have to sell the whole thing. So there's definitely new ideas coming into play here that are really worth examining. But do I think that the NFT sale that Beeple did for $69.3 million of a piece of art is real and correct? No. You know, I mean, the owner purchased back his own art for $69.3 million. It just doesn't make sense, right?
Yeah.
So,
I still haven't, I must admit, I still haven't got my head around NFTs fundamentally. I mean, one of the most interesting people that I follow that's dealing with it is the marketing guy, Gary Vaynerchuk. He's doing building community around NFTs and doing book games and all these things, but I haven't fully understood yet You know, in terms of the digital art, a lot of people criticize NFTs and say, oh, I can, you know, this is an NFT is a piece of digital art, but hey, I can take a picture or a screenshot of your NFT and you know, share it around. So what's the value in that? But you know, ultimately you're talking about the digital rights behind it, which obviously do have value, because some of those can lead to royalties and licensing and things like that. But of course, here in the US, then when you're dealing with revenue sharing and royalties and flows of income from you know, from what essentially is a contract, you're into securities.
Yeah.
And the crypto people, they hate that.
Yeah. And there's a really interesting one happening in the States at the moment with Top Shot. Have you come across these guys, the NBA?
I've heard of this. I don't know much about it. I heard about it. Yeah.
So I'm afraid my knowledge of basketball is I'll have to go with Michael Jordan. I know he's long since stopped.
Right.
If Jordan dunked over Patrick Ewing, I'm going back to the 90s.
Right. Yeah.
You know, there's going to be a fabulous image of that, and there'll be an NFT for that image. Now, that image was on the back page of the New York Post, right? So you can see it there. And you could look at it, you could cut that out, you can put it on your wall, you can do anything with it. But it's valueless. It has no digital property rights. It's just a picture in a newspaper.
Yeah.
The NBA will sell, or are now starting to sell, we call it 100, just to make it easy. They're going to sell 100 NFTs in that image. Okay.
Yes.
And I don't know if it's 100 or 1,000,000. It makes no difference. But if it's 100, then 100 people buy the digital image of was it Jordan dunking over Ewing, right? And if that image goes up in time, because sometimes images do go up in value over time, they become, you know, sort of iconic of a particular era. Yeah. And that image could go up, and therefore you could sell your ownership, your 1% ownership of that, you could sell for a profit. And the second part of it is, and Top Shot are getting very clever at doing this. Now, I haven't been in the States in a few months, so I don't know, but I was reading about this yesterday. They're opening up real world things for fans. So let's say 100 people do buy that image. Then the next NBA game you go to, if you have that in your wallet, if you have that NFT in your wallet, maybe you get a free beer, or maybe you get a free t-shirt, or maybe you get to meet the players, or maybe you get courtside seats, or maybe you get something else in the real world, because having the NFT is like being in the club. And there's a restaurant just started in New York where the only way to get entrance is to have the NFT.
Yes.
So you know, these Soho clubs and these places have become very exclusive.
Yeah.
But this is NFT only. Okay. So you have to have the NFT. When you arrive, you show your NFT, or you show your wallet that has your NFT, and in you go, and you pay using a cryptocurrency, or you pay however you pay, but none of it is with cash anymore. Now, that's the first time I've heard of this, but the concept of being an NFT owner to open up a broader range of possibilities from a marketing perspective is truly, truly interesting, because most everybody in the world feels a kind of a them and us way about things. So as you can see, not that it's product placement, but I'm a Coke guy. You know, you couldn't give me a Pepsi to save my life. You know? Could I tell them apart if they were in two glasses in front of me? Maybe, maybe not. But I associate with Coca-Cola, with the red can, whatever it is. Now, if Coca-Cola do an NFT and I get some real world benefits from that, I'm suddenly interested, because Coca-Cola are my team, so to speak. You know, I think there's a huge area of digital marketing that people are going to pursue. And look, you know, the best book I ever bought, Jonathan, was the front cover was all marketeers are liars, and page 1 said, "Told you."
So just quickly, you know, we talked a lot about cryptocurrency and you know, digital banking and fintech and stuff like that. And you use a lot of examples in London, which is great. But I'm really keen, just a little bit of an overview. What's Ireland's, because Ireland has a big financial center, fantastic international financial center, lots of investment funds and international banking and stuff like that you guys do there. What's Ireland's take on cryptocurrency, for instance? What's generally, just high level?
Yeah, no, sure, and we're very grateful to all the work that you put in while you were here making it that international.
You're welcome. You're
We don't
welcome.
forget. We don't forget, my friend.
I
Uh,
remember, yeah.
I think what's happening in Ireland is there's a massive move towards data analytics and data science. We're
Right.
very, very big on those areas. Look, you know, Google, Amazon, Facebook, Apple, they're all here. Okay, so the big players are all here. They have big numbers here, and they're giving big jobs. But the jobs they're giving, it's not to answer the phone. It's not to, you know, be nice to people. Data science is the growth industry. It's hopping in Dublin at the moment. Data science and the associated coding fields that go with that. And that broadens out into currency and cryptocurrency and crypto assets as well, because we have a very young, well-educated population here. We're very proud of our education system here in Ireland. And, you know, what's happening here as well is we're bringing in a lot of Europeans into Ireland who want to work for these companies. So we're getting a lovely mix of people now that's really turning Dublin, my hometown, into, you know, quite a mix of people, quite a mix of cultures and languages, and it's great. It's really, really interesting and really, really fun to be around. So that's great. But what I'm seeing most is there's two aspects. And the first one is going back to the banks. The banks are doing a lot of reach outs with datathons and hackathons and things like that to try and generate ideas and to try and push things into learning laboratories. And, you know, there's stuff happening there all the time. So the early stage tech sector, the early stage fintech sector is growing rapidly in Ireland. And there've been some successes already coming out 2, 3, 5 years down the line, and that's going great. The other thing, as I say, is happening is data science. So what's happening in data science is, and I'm involved in a little project where I do some consulting for a company called the European Institute of Data Analytics, EIDA, EIDA, and our website is eida.ie.
Oh, okay.
And what we're trying to do is we see an enormous opportunity. So my background, as you know, Jonathan, is as an accountant and an auditor. And I've also spent time, as I just mentioned, working in the big banks. And what we see is an enormous opportunity for the auditors and the younger accountants in the world, the older ones too, if they want, but the younger ones, they're not picking up on the basics of data science. So what the accounting firms, the big four we'll call them, what they're having to do is bring in specialized talent. Sometimes they fly them in from London to Dublin. But the work that they're doing, we're in the industry and looking at it, the work that they're doing is equivalent to in Excel, you know, doing a pivot table. It's not very complicated work. But the young accountants aren't being, there's no shortage of brains, but they're not being taught this. So EIDA's worldview on this, and as I say, we've got industry experts for banking, education, software, and myself that kind of has a bit of those, and some telecoms industry as experience as well. We've looked at this and we said, there's a massive opportunity here for training for accountants who need data science training. There's a lot of training already taking place for data scientists. There's master's degrees popping up everywhere, and that's great. And they're going to go on and become data scientists. But actually, the accountants are being left behind. And what happens when you leave the accountants behind is you get something like Wirecard, where they don't know what's going on, and you end up with fraud. Yeah. And, you know, I mean, you know this from my past in telecommunications. I worked at WorldCom back at the turn of the century when there was a massive fraud there. And, you know, I had friends working in Enron when there was another massive fraud. And what was happening was the accountants working there hadn't kept up with what the technology was, didn't understand what management was doing, and fraud was the result. Now, I'm not suggesting that there's endemic fraud going on anywhere. Not my suggestion. My observation is that the accountants need to do more work to stay up to date. And the fear, based on my own career experience, and in the exact example of Wirecard, which is the largest European fraud for quite a long time, is that in a fintech space, the auditors didn't know. And in that case, the auditors in Germany, and indeed the German government, were trying to take action against the journalist in question and have him banned from Germany and all this kind of stuff, you know, and it was ridiculous. Now, the fallout from that has been tragic. One of the executives in Wirecard committed suicide, which is terribly, terribly sad. And there's another gentleman still on the run. So that, you know, these are terrible things that have happened, but essentially they happened in a basic Ponzi scheme. It was nothing more than that. But the auditors weren't well enough skilled and well versed enough to find out where the money went. And
That's
that's
amazing.
tough, but
Because those headlines were kind of boggling the mind, because it was basically what they were saying was that Ernst & Young was saying, well, yeah, we did, we've lost, what was it? We can't find over $2 billion. I
$2
mean,
billion.
yeah, I mean, that really boggled the mind. But it's really fascinating what you're working on in terms of data science, because I have some friends who they started at the big four, Ernst & Young, KPMG, about maybe 2 years ago. They are doing tax law.
Yeah.
And so I've been I got a little bit of news flowing out of the big four, and I last I heard, a lot of these big four, PwC or so, they're offering to their people, all of their staff, the opportunity to get into data science. There was some sort of program that they offered, but obviously that was only announced like a year ago. And then, of course, you got to think, of course, like, the entirety of the existing experienced workforce that doesn't know anything about data science, far less. I mean, I can say, my colleagues, they're young tax lawyers, but none of them are kind of what I would consider conversant with data science.
Yes.
So,
John, to give you an utterly ridiculous analogy, way before our time, executives, would never have thought of typing out an email. They had secretaries to type letters for them.
Yeah.
This is all going to change. I mean, we all type our own emails now, and there's no big deal with it. So the notion of having a secretary to put out your messages is long gone. Yeah. Well, I'm going to tell you that in 10 or 15 years, the notion of having data scientists come in to do your data science work, that'll be gone too, because everybody at a certain level will be proficient enough to do their own analysis work, in the same way that we can all use Excel or Word. It's exactly the same set of skills. And there's some brilliant visualization software out there which gets you those really, bang for your buck charts and the histograms and the Instagrams and whatever else they're called, all the grams. Yeah. And they look amazing. And we've done some work with some of those visualization companies, and it's just fabulous what they can do. And really, because their software is so clever, you're literally, when you get to understand it, you're literally picking things up and pushing it in the chart, and woof, there it is. And it's that easy, okay? But you have to have some of the basic understanding before you can get there. And what we're seeing is, in an Irish context specifically, and possibly broader than that, the young kids aren't getting enough. So I can speak with a little bit of knowledge about this, because my own son is doing a business degree here in Ireland at the moment. And, he's sort of 3rd year out of 4, and they're still in Excel. You know, now they're doing nice work in Excel, like it's clever stuff what they're doing, but they really need to step it up and get forward. Now, the data science work in the data science degrees, they're doing all the right stuff. And that's why I say the problem isn't creating data scientists. The problem is getting the rest of the world to be able to speak to the data scientists, because the gap will be too large.
Yeah, because I was thinking that what you're going to need is obviously executives are going to need to be strategically aware of what data science is and what opportunities it may offer, what potential it may offer. And as you say, they need to be able to talk to the data scientists, not just hive them off in a room and view them as kind of a problem, because they find it difficult to speak to them. And so this is, and that's the whole thing, right? I've heard about data science that, because I run a small firm, as you know, and I was looking at this about a year ago, but I know I'm going to have to hire someone, bring somebody on my team who does and is trained in data science, because when you want to do things like look at target markets or even interrogate the internet, you need someone who's versed and evolved. And I've spoken to a number of data science people about what's possible, and even there I found my kind of lack of training, it made that process difficult. And the thing I would really because I've heard that there's actually a lot of data which is generated just by, say for instance, by you or by people using various things, various systems. And I have heard that this stuff exists somewhere in the cloud, and it's not, even that is not being interrogated yet, because we haven't developed the skills to do it yet.
So Jonathan, you're so right. And what you're effectively talking about there is big data and what big data is, right? Now, I try and explain to people, big data is just lots and lots of data, okay? And that's the first thing. So I see a lot of people initially overwhelmed by this in the sense that, oh my God, it's big data. No, that just means there's lots of it. Okay, and then I'll go to the second level of explaining that, and I say, it's about the 3 V's. So we have the 3 C's with banks. These are the 3 V's. So it's volume, velocity, and variety. So now we have more volume of data. So let's take a shop. In the past, we could have looked at the shop as an accountant, and I could have told you what they turned over last month or 2 months ago. No, now I've got to be able to tell you what they turned over in the last hour. Okay, and be able to compare that to the hour before and the hour before, and be doing it in real time. Okay. That's the volume of data and how it turns over. And the velocity of data is the rapidity of how it turns over as well. So you put those 2 things together and it becomes huge. And then the variety of data is just, yes, in the past, if I owned the corner shop, I would have known I sold 1 newspaper, but not anymore. Now, when you tap your card, I know I sold it to you, and I know the type of card you have, and I know plenty more about you, because if I'm clever and I'm doing it, I'll know what else you bought in my shop the week before or the week before. And I can start understanding, you know, if you have, I'm thinking of a railway station in London that has a newspaper stand, and the guy wants to figure out what he needs to sell. It was easy in the old days. You sold canned drinks, cigarettes, and newspapers, and you did well. Well, that's not where the world is at anymore, because nobody smokes and nobody wants to drink Coca-Cola anymore except me. So now you need energy drinks, and you need smoothies, and you need whatever you need. And it's not my area, but this is what analytics does for you. And you'll also see from the analytics who's buying it, the times they're buying it, what you need it at, when you sell more of something. So presumably you would sell more juices in the morning and less in the nighttime, and in the nighttime. So you get all these things, you get all these data points, and then you set your business up that way. So the little guy beside whatever it is, train station in or around London, he's going to change his entire business based on a very small piece of data analytics work. And if it works for the guy selling the newspaper at the train station, then it works for Marks and Spencer's, it works for Debenhams, it works for Harrods, it works for whoever. It works in retail, it works everywhere. Because it's just, instead of being able, you and I could have a conversation at that train station every morning and say, gosh, I wish he sold cold orange juice. But now you have every single transaction being capable of being monitored in real time.
That is amazing.
Yeah.
So can you tell us a little bit about the type, just high level, kind of what type of, you know, where Ida's going, and kind of what type of training courses you'll be providing them for home, you know?
Sure. So it's a lot along the lines that I've just been mentioning, like that, for instance, because, you know, like we say, you know, data is huge. We've all, the way we came together, all of us in Ida, we all worked in banking at the same time. And my role actually was sort of connecting, you pretty much joined the dots already, but I was connecting the business executive side of things to the data scientists and sitting in the middle and trying to translate what the executives wanted into what the data scientists could build. And, you know, that's an interesting kind of space, because you know, the chief risk officer, for instance, he's got a whole set of things that he needs to do. Some of those are regulatory compliance that the Central Bank of Ireland wants, or the Bank of England wants, depending on which country we were in at the time. And they just have to be done, and have to be done by Friday, end of. But then there's a whole bunch of other stuff that he's interested in. And this is where it gets really interesting, because, not criticizing the CRO who I worked with, he's a brilliant guy, but the stuff that he doesn't know he can get, like you said a moment ago. So that's where I get the data scientist to go, and what else can you give me? And what else can you give me? And he starts getting creative. And then the stuff that the CRO says, I wonder if, and then you bring it to the data scientist and you say, can you do anything on this? And you kind of get a merge of minds. And that's what we were trying to do. And I was fortunate enough to work in a really nice team there. Now, the background to this is that NatWest made their decision. You all know this, wouldn't be local to the market, but NatWest made a decision last year to exit the Republic of Ireland market. And what that meant was that, you know, everybody started thinking about things. guys of a certain age started thinking about the future and what they might want to do and how they might want to go about it. So Ida sort of jumped up from that, and we looked at the problem and we said, this is a problem we can fix. We know how to fix this problem. We're around this problem all the time, and we can teach this because teaching is core to, we've got 2 PhDs in the team, and we've got a couple of people who do lecturing as well. And education is core to what we're about. So we're going to work in that space. And we think that our first target market, as I said, was the accountants. But broadly speaking, we can teach anything from the basic level of interrogation that an executive would want to be able to have some feeling about what he might want or she might want on his or her dashboard, that initial level, right down to just above the data scientist level. Reason we're not going to the data scientist level is those guys are really, really clever, and there's lots of education out there for them already. So we don't need to teach those guys. They're doing fine. They've got plenty of choice. It's the bit when you step back from those guys that causes the difficulty, all the way out through the business. And that's where Ida is going to focus its attention and deliver its courses.
Fantastic. So you're focusing on the commercial, the turn it into communication.
Exactly.
Yeah, that's typically you. That's a smart move. I get it. Yeah. I love it. Yeah, that's quintessential Haran thinking right there. Yeah, I get that.
You know it. You know it.
I know it. I know it when I see it. Yeah. No, that's been great, Dave. We've chatted for just over an hour now. So yeah, no, thank you for this. Clear-headed thinking on all this stuff, fintech, crypto, data science, and especially digital banking. There's a lot of information out there, but as I said, clear-headed thinking, which is just really kind of explains what's happening is it's few and far between. So this has been really, really good for me, and I think the people who that I will share this with and who will have access to it, I think will benefit tremendously from this. So yeah.
Jonathan, it was an absolute pleasure talking to you.
Yeah, no, thanks, Dave. And thanks a lot. All right. Thank you. One sec.